whatever the profit available at the time of acquisition, it is called capital profit. After acquisition, whatever the profit available is called revenue profit. If there is excess goodwill is there, it will come on the asset side of the balance sheet. If the excess capital reserve is there, that will come on the liability side of the balance sheet. There was a depreciation of machinery. 50,000 becomes 32,000, becomes 18,000, 12,000, 6,000. The minority interest goes to 70,000. That will come on the liability side of the balance sheet. Hello, my dear student. I am Dr. B.S. Subramaniam, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First Grade College, a temple of excellence, MYSURU. I am going to hand Corporate Accounting 2, 4th semester, Unit 4, Session 2, in favor of holding company of, that is, BCom is considered 4th semester BCom. In the last semester, I handle your subject, that is Corporate Accounting 1. Now, I am going to hand Corporate Accounting 2. So, this time, I will start with a Unit 4. It's one of the biggest chapter we are having and a very, very good chapter as Corporate Accounting is considered. I will explain the problem very detailedly. Today, I am going to solve the problem. In the last session, I will explain the concept. What is holding company? This time, I'm going to solve the problem about the holding company. The first problem, it goes like this. So, this is a problem. From the following detail given below, prepare consolidated balance sheet, that is combined balance sheet, of H company and its subsidiary S company. The balance sheet on the date, H company and S company. See this is important. 800 shares. Means H Limited purchase S company of 800 share. How many shares I am going to explain. Then on the date of acquisition of share by H company, in S company later had an undistributed profit of 18,000 and reserve of 12,000. I will explain this. The value of the building, plant and machinery were considered as 1,36,000 and 32,000 respectively. Debtor of H company includes 11,000 due from S company, and also bills payable of H company includes a bill of rupees 2,000 accepted in favor of S company. Now, I am going to explain detailedly. A holding company is one which holds more number of shares, more than 50% of the shares of the subsidiary company, we say. So, what is a holding company? A holding company is one which holds more than 50% of the shares of the other company. The other company is called subsidiary company. By chance, if S company having about 6,000 shares, out of 6,000 shares, 4,000 shares acquired by H Limited. Or totally how many shares in S company? This is S company minority, 6,000 share. Out of that 4,000 shares held by H Limited, the balance 2,000 shares goes to subsidiary company. So the ratio is H ratio, H is to S. Here 4,000 is to 2,000. 2 2s are 2 1s. So they are in the ratio of 2:1. I will explain it with an example. The total number of shares, assume that about 6,000 in X company, 4,000 shares is acquired by H Limited, balance 2,000 share goes in favor of subsidiary company. The ratio between H and S is 4,000 is to 2,000. So this is one way. If we see our problem here, see that here we have got 1,20,000 share of rupees 100 each. So 1,20,000 here, 1 lakh total number of shares in S Limited is 1,20,000 divided by 10 is 1,200 share. H company acquired how many shares? 800 shares, and the balance 400 shares are in the favor of minority shareholders. So what is the total number of shares in S Limited? 1200 shares. So 1,20,000 divided by, we have got 1,20,000 of rupees 100 each, means 1200 share. Out of that, H company acquired 800 share for rupees 1,20,000. Total number of shares of S Limited, they are having 1,20,000 capital, divided by 100 is 1200 share. H company acquired 800 share, and the balance goes to 400 to minority. So they are in the ratio of H is to S, 800 is to 400. They are in the ratio of 2 is to 1. So at present, at the time of acquisition, S company is having 1,20,000 divided by 100 is 1200. H company acquired 800 share, and the balance 400 shares are in the favor of minority shareholder. H is to S, 800 is to 400. So they are in the ratio of 2 is to 1. Now, if we see here, the total number of shares is 1200, 800 acquired by H Limited, 400 goes to minority. The value of the share is 100, 400 into 100 is 40,000. So remaining 80,000 goes to H Limited. Then, if you see the problem here, on the date of acquisition, when the H company is taking over the S Limited, on the date of acquisition by H Limited, in fact, the later has undistributed profit of 18,000, another reserve is 12,000. So at the time of acquisition, whatever available is called capital profit. If the reserve is capital reserve, after acquisition is called revenue reserve and revenue profit. I will repeat, whatever the profit available at the time of acquisition, it is called capital profit. After acquisition, whatever the profit available is called revenue profit. Whatever the reserve available at the time of acquisition is called capital reserve. After acquisition, it is called revenue reserve. So, if you see here, the total profit is 42,000 of S company. And the general reserve is 30,000. You remember, general reserve is 30,000 and the profit and loss account is 42,000. Come back here. The total profit available in the balance sheet is 42,000. At the time of acquisition, there was a capital profit of 18,000. So the remaining 24,000 is the revenue profit. This should be shared in the ratio of 3 is to 1. 2 by 3 of 18,000, 2 by 3, 6 are 6. 12,000 goes to H Limited, 6,000 goes to minority. I distributed 18,000 capital profit in favor of H Limited, in favor of S Limited. Then the total reserve available in the balance sheet of S Limited is 30,000. At the time of acquisition, there was a capital reserve of 12,000, remaining is 18,000. 12,000 share in the ratio of 2 is to 1. 2 by 3, 3 4s are 4 2s are 8,000 goes to H Limited, 4,000 goes to minority. The balance 18,000 share 12,000, 6,000. Hope understand this. Then regarding this here, he say the building become 1,36,000, he says. What's the building value? 1 lakh. It become 1,36,000. How much is more? That is 36,000 is more. Machinery 50,000. It has come down to 18,000. So if you have got building value, today is 1 lakh 30, market value is 1 lakh 36,000. At the time of acquisition is only 1 lakh. How much appreciated? 36,000. That will be, it's nothing but a capital profit that can be shared in the ratio of 24,000, 12. So 2 is to 1. Then regarding the machinery, it was pre 50,000. Today, the market value is 32,000. How much have been reduced? 18,000. It is called the capital loss. 18,000. That should be shared in the ratio of 2 is to 1. 12,000, 6,000. If we add these now, it is called minority interest. 46, 54, 58. 64, 72, 76 is 70,000 is 6,000, 6,000 gone. 48, 52, 58, 60, 70,000. That's a minority interest, subsidiary company interest. It will come on the liability side of the balance sheet. I will repeat once again. The total profit is 42,000. At the time of acquisition, they have got 18,000, which is considered as a capital profit. The balance is 24,000 is considered as a revenue profit. Share the 18,000 in the ratio of 2:1. H get 12,000. Minority 6,000, 24,000, 16,000, 18,000. The total reserve available is 30,000 minus capital reserve is 12,000. The balance is 18,000 is called revenue reserve. Share this 12,000 in the ratio of 2:1. So H Limited get 8,000, whereas the minority 4,000, 18,000, 12,000, 6,000. There was an appreciation of the building. 1 lakh become 1,36,000. There was an increase of 36,000 and another is 24. Share this. H gets 24,000. Yes, get the minority get 12,000. There was a depreciation of machinery which is considered as a capital loss. The present price of the machinery is the book value is no, the original value is 50,000. Today it's valuing 32,000. How much has come down? 18,000. Share in the ratio of 2:1. Then this is nothing but a minus figure. So 70,000 is the minority interest that will come on the liability side of the balance sheet. Then, so the H Limited purchase 1,200 share, they paid how much money? 1,20,000. Real value 800 into 100 is that is 80,000. How much paid more? 40,000 is considered as a goodwill. So actually they have to pay 80,000. They paid how much money? 1,20,000. How much paid more? 40,000 is considered as a goodwill. So calculation of capital reserve. Capital reserve, capital profit minus capital reserve. 12,000, 8,000, 24,000 appreciation minus capital loss of 12,000. There's a difference of 32,000. What the problem says, either the goodwill or the capital reserve, whichever is more should appear on the balance sheet. Both should not be appear. Even goodwill and capital reserve, both should not appear. Either the goodwill or the capital. If there is excess goodwill is there, it will come on the asset side of the balance sheet. If the excess capital reserve is there, that will come on the liability side of the balance sheet. Here the goodwill is 40,000, then your capital reserve is 32,000, excess is 8,000, goodwill will appear on the asset side of the balance sheet. We'll move on to balance sheet now. So we have to do the consolidated balance sheet. Both H companies asset, S company asset, both should be added. Whatever the mutual is there, that should be wiped off. See that? Here, see the one. Debtors of H company includes 11,000 due from S. Before the consolidation, S company has to pay. They are our debtor to extent of how much? 11,000 to H company. When they becomes one and the same, means H and S combined together become one and the same. So there is no question of debtors and creditor. So you have to deduct 11,000 from the debtor, 11,000 from the creditor. I will repeat. Before the consolidation, before acquiring the what's called the S company, so S company has to pay how much money? 11,000 to H company. Debtors of H company, 11,000 due from S. Who has to pay? S company has to pay before acquisition. Once they become acquired, H and S become one and the same. There is no question of debtors and creditor. So there is a mutual adjustment of 11,000. Both the debtor should be added, deduct 11,000. Both the creditor should be added, deduct the. So deduct 11,000 from the creditor, 11,000 from the debtor. Then, and also BP payable on H company includes a bill of return accepted in favor of S company. So H company has to pay how much money? 2,500 bills payable. So when they are consolidating each other, the question of BR and BP does not arise at all. It is a mutual adjustment. Deduct from the BR and deduct from the BP. That's a questionable. Then building. Previously, we have got H Limited 2,90,000, S Limited 1 lakh, totally 3,90,000. There was an appreciation of 36,000. It became 4,26,000. Regarding the machinery, H Limited is 1,20,000. S Limited is 50,000. It became 1,70,000. It has been come down by 18,000. Today's valuing 1,52,000. Now, share capital of H Limited, you have to take 4 lakh. General reserve of H Limited is 1 lakh. Add revenue reserve. Add revenue means revenue reserve should be added. So we already taken the capital reserve. Now the revenue reserve has been left out. Add the revenue reserve. It become 1,12,000. Profit and loss account of H Limited is 50,000. Add revenue. That is the revenue profit. 16,000 becomes 66,000. Creditor 30,000 plus 20,000 50,000 minus mutual 11,000. It becomes 39,000. Here see, debtor 70,000, 30,000, 1 lakh minus mutual is 11 lakh, 11,000 become 89,000. 70,000, 30,000, 1 lakh minus mutual adjustment is 11,000. It becomes 89,000. Bank 20,000 plus 10,000, that is 30,000. BR 20,000 plus 30, 50 minus mutual 2,500. Here say same mutual 2,000. It becomes 47,500. Stock now, see the stock here, 80,000 plus 20,000 becomes 1 lakh. 80,000 plus 20,000 becomes 1 lakh. Goodwill as per the calculation is 8,000. Then bills payable 28,000 minus mutual is 2,500. Balance is 2,500. 8% debenture available in the balance sheet, same amount. Minority interest is 70,000. Totally it will tally for 8,52,500. Very easy. Very easy to go. But you must see that share capital of H Limited, reserve of H Limited, add the revenue reserve, profit of H Limited, add the revenue profit. Creditor is mutual, 11,000. See that here, mutual, 11,000. It's a mutual adjustment. Then regarding the BP, here 2,500. Deduct from BR, deduct from BP, and the minority interest will come on the liability side of the balance sheet. The company has to pay. So if you go by one now, total number of shares is 1,20,000 divided by 100 is 1,200. 800 shares acquired by H Limited. The balance goes to 400 goes to minority. They are in the ratio of 800 is to 400, 2 is to 1. So total number of shares 1,200, 800, 400 into 100 is 40,000. Total profit is 42,000 as per the balance sheet. At the time of acquisition, capital profit 18,000, remaining is 24,000, 12,000, 6,000, 16,800. The total reserve available is 30,000. Minus capital reserve available at the adjustment is 12,000, remaining revenue reserve 12,000, 8,000, 4,000, 18,000, 12,000, 6,000. There was appreciation of building to the extent of 36,000, 24,000, 12,000. There was a depreciation of machinery, 50,000 becomes 32,000, becomes 18,000, 12,000, 6,000. The minority interest goes to 70,000. That will come on the liability side of the balance sheet. H Limited paid how much money? 1,20,000 for 800 share. The real value, face value is 80,000. How much paid more? 40,000 is a goodwill. Then you have to have capital reserve, capital profit, appreciation, minus capital loss you deducted is 32,000. Whichever is more should become either the capital reserve or the goodwill, whichever is more. Your goodwill is 40,000. Your capital profit, reserve and capital profit is 32,000. This is 24, 12,000, 12,000 gone. 32,000 balance is 8,000 will appear on the asset side of the balance sheet. Then this is share capital of H Limited, reserve of H Limited, add the revenue reserve, profit of H Limited, add the revenue creditor, add both creditor, consolidated balance sheet minus mutual adjustment 11,000, building, add both, add appreciation, machinery, depreciation, debtor, mutual, bank 30,000, BR mutual, stock 80,000 plus 20,000 1 lakh, goodwill as per the calculation is 8,000. Here BP is mutual, 8% debenture as per the balance sheet is 1,40,000. The minority interest is 70,000. It will tally for 8,52,000 fund. Very, very easy problem. But we have to understand at the time of acquisition is capital profit, after acquisition is revenue profit. At the time of acquisition, reserve is called capital reserve. After acquisition is called revenue reserve. Hope you understand that. We have solved the first problem of that. Very easy problem we have solved. You have to understand what is capital profit, what's a capital reserve, either the goodwill or the capital, whichever is more. If there is a goodwill is more, it will come on the asset side of the balance sheet. If the capital reserve is there, it will come on the liability side of the balance sheet. Both the assets should be added. If there is a debtor in the adjustment or creditor in the adjustment, add both the debtor, deduct mutual, add both the creditor, deduct. If the BR and BP is given in the adjustment, add both the BR, deduct mutually, add both the BP, deduct mutual adjustment. There is no question of debtor or creditor, no question of BR or BP, because they are the same. They are called consolidated balance sheet. We'll have some more problem in the next session. Till then, goodbye. Thank you. Thank you once again. Hope you understand the problem. We'll meet in the next session.